Hey folks, welcome back to the channel. This is Jason. How's it going today? Let's talk a little bit about really anything you want to, but I did want to cover a bunch of EV news. It's been probably a week or two since I've really talked about EVs. There's been some news vis-a-vis Elon Musk and the Twitter deal. It's not something I really want to talk about, but we'll address that. I will say that just based on reading the court filings and reading the logic behind the court filings, there's very little chance that he was getting out of the Twitter deal. Like it wasn't a 0% chance, but it was pretty close to zero. Almost none of those are almost none of the cases that I can remember where someone had like a material adverse effect did the case actually go in their favor, and that's probably not likely to happen just because it's Elon Musk. But additionally, like when you're the CEO of a company or an officer in a company or an insider in a company and you're using Twitter, your statements are not just taken as, oh, this is free speech. I can say whatever I want to. It's also often taken as a statement on company policy. And you do have to be careful about what you're saying online through Twitter and all that. And he actually made a tweet a few weeks ago, I think, where he stated, oh, why would I want to buy Twitter if World War III is going to start? So in a civil case, actually, well, I mean, in a criminal case, that wouldn't be like admission of a crime or anything like that. But in a civil case, that would be sort of like admission of intent, or it gives insight into what his thought process is, which honestly, that is not a reason that you could back out of the deal once it's been signed. And I honestly think that his lawyers probably gave him some advice that you're not really going to be able to fight this. And I also believe that this is one of the reasons why that the depositions are still going to be held. The case hasn't been dropped and all of that stuff. Um, so Yavuz Bulukbasi, how's it going? I don't think I've ever seen you on one of my live streams before. Just wanted to recognize you and say hello. So yeah, let's talk about Xpeng. And so I do hold a lot of Xpeng. And I have been a big proponent of the manner in which they're building factories and how that's going to aid them in production, their distributed production model, the fact that they have smaller facilities, they have a bunch of them in place, or they have a bunch of them under construction right now. And by April, we should see roughly them having about 400,000 vehicle production capacity per year, but we're not going to see that until April of 2023. Okay. There's been a lot of concern with Xpeng lately, and I share that concern. Trust you, I'm way underwater on my Xpeng stock at this moment, and it isn't exactly the most wonderful thing in the world. So let's talk about. Hold on a second here. I highlighted one of my own comments, which I don't like to do. But okay, so you mentioned in various occasions that Xpeng was able to sell every car that they produce. So that doesn't mean that Xpeng is special in any dimension. It doesn't mean, and it's the same thing with Tesla. To a degree, that's different with Tesla though, because market conditions are very different here in the United States and in Europe. We have incentives to buy electric vehicles, but we don't have the incentives like China does. You're actually punished for buying an internal combustion engine vehicle in most really large congested cities. You would have to go out if you wanted a license plate for your car and you wanted to drive legally. If you have an internal combustion engine vehicle, you have to go to an auction to buy your license plate. It's going to cost you anywhere from $14,000 to $18,000 now. I just looked this up a couple of days ago, and there's actually no guarantee that you're going to be a winning bidder at an auction, right? So that's a huge thing. So beyond the subsidies of a couple $1,000s that they're giving these buyers, you're now also knocking $14,000 to $18,000 off the price of the vehicle, because you have to buy a license plate, right? And if you buy an electric vehicle, you don't have to get a license plate through an auction process. So they have much bigger incentives to go electric than we do. So I was just looking at the count of vehicle brands in China, and I keep saying there's 130 vehicle brands in China. So there's basically about 130 master vehicle brands in China, but total vehicle brands being sold in China are about 300 right now. Every single one of those brands right now is either offering an electric vehicle or is planning to offer an electric vehicle by the end of 2023. Every single one. So the EV revolution hasn't just started. The tide has turned. And it's not because EVs are going to save the planet because they're a green technology, and they will do that. It's not that they don't have production challenges. It's not that you don't have charging issues with charging infrastructure. It's the fact that your manufacturing margin is so much better with an electric vehicle than it is on the internal combustion engine. So, and that's the real reason they're doing it. And back about in the middle of 2020, with Tesla, when we started looking at Tesla's numbers based on their production costs and the margins of the actual reporting, that's when it really became abundantly clear that Tesla was making about 500,000 vehicles per year. Their margins were exactly what GM's were, and GM was making 7.7 million vehicles per year, which told me right then that if everyone didn't already have a plan to make the switch to electric vehicles in the works, that it was happening very soon. And not because everyone wants to be an environmentalist, and it's just going to happen because that's how you're going to make money. If you don't do that, everyone else who does is simply going to be more profitable because their profit margins are going to be higher. They're going to attract more investment. They're going to be able to go out and borrow money to capitalize, build more factories. They're simply going to outproduce you. So right now, in terms of production, though, there's enough demand out there for electric vehicles that every electric vehicle produced across every country or company is having no problem being sold in China. There are a few brands or a few issues here in the United States. I was reading an article. I can't remember which vehicle it was, but they basically couldn't sell them. But yeah. So move on to the second part of this question about. I heard that they adjusted the G9 pricing after the Li L8 release since customers are trying to get their deposits back. So I have not seen any confirmation of those rumors. It may be true, but I haven't seen any confirmation of those rumors. But yeah, so I would not really be too concerned if that was happening. Like I said, when it comes to the choices that consumers have in China when it comes to electric vehicles, they have a lot more choices than we do at this point. I've counted about 14 different brands of electric vehicles either on roads or being charged here in San Diego, and that's we probably have more of them available here because San Diego is used as a test market or even a vehicle testing place for a lot of different companies. So I've seen a lot of different vehicles over the years that never even made it into market into the US because they were just brought here to test. And I've actually met some of the drivers and spoken to them. And this is internal combustion engines as well as electric vehicles. So yeah. And basically the P5 isn't a disaster. They're basically the factory that produces the P5, they're still in the ramp up stage. I think they just started really producing those and ramping up that about the April timeframe. If you paid any attention to how long it took, Tesla to sort of ramp up production at their individual facilities, it takes up to a year and a half sometimes to hit maximum production capacity. But the P5, their numbers are not going up, and it's really about supply. Smaller EV makers, like I said in my post, in which XPeng and NIO both qualify for this, they're actually having more supply chain problems than your larger companies are. The people that provide parts for these really large companies that sell 1 million, 2 million, 3 million vehicles a year, they're servicing those customers first. And right now, NIO and XPeng, if you're going to prioritize those companies when it comes to chips, put it this way, they would probably rather prioritize GM over XPeng or NIO at this point if they can only provide a certain amount of chips that are needed for vehicle manufacture. So they're struggling and they're paying higher prices and they're having difficulty finding what they need. Additionally, and this is probably one of those ancillary effects that no one really thought of, the amount of circuitry and semiconductors that are needed for weapons being used in the Ukraine conflict right now in smart weapons, there's additional demand on those now since that started as well. And that's probably something that a lot of people haven't thought about when it comes to EV makers. Some of the technology that goes into making missile guidance systems is also used in all kinds of other electronics as well. So the earnings, I don't think was terrible. If you've been watching earnings over the last couple of years, you realize that there's still an improvement there. Yes, they are burning cash, but remember they're building 2 factories at this point. And I am a little concerned about the the slowing of growth and revenue. I would chalk that up to supply chain issues and not to a decrease in demand. Yeah. So yeah, several posts on social media that call the P5 is a failure model. From its price point alone, its potential market is a lot larger than it was for the P7. I was reading somewhere there's almost like 40 million more people that can afford a P5 than can afford a P7 based on its pricing. So I'm actually waiting for that to. I'm actually waiting for more information to come out on sales numbers as we hopefully eventually see an improvement in supply chain issues. Who the heck knows when that's going to happen? Like across all of my businesses, and just getting things done around my house, I'm seeing supply chain issues everywhere right now. Finding parts for a solar project that I want to build in my backyard. Basically, I want to build a solar powered aquaponics farm in this back quarter acre that I have that's kind of unused. I can't find the parts that I need right now to do that, and that seems to be completely unrelated at this point. So, I did want to take a. I'm happy to talk about any questions that you guys have when it comes to individual stocks today. And let me see here. And I just want to take a look at markets real fast. I haven't actually taken a look at them today since earlier, so it's probably going to be down a little bit here. Um, and also Cisco WebEx. In terms of being down, man, I'm getting crushed along this with just you guys, or with you guys as well. But Dow Jones down today, 346 points. S&P down 38%, so about 1% off for the S&P and Dow. The Nasdaq down 75 points, or about 0.68%. Yeah, so some of the big news in the EV world in particular is this, and we're going to talk about that. And this kind of crushed me, guys. And but I'm gonna delay my purchase in a vehicle. I need something to tow a boat, and I drive more frequently now than I have in the past. So I'm looking to get an electric car now. Finally, every time I've had the money to buy a Tesla, I've ended up buying more Tesla stock instead, and that's really worked out. Right now, though, I need a tow vehicle, and Ford raised its price for the 2023 F-150 Lightning by $5,000 amid ongoing supply chain disruptions. So, like I was talking about before, this is affecting everyone, and it's affecting someone with the purchasing power of Ford, then it's going to affect those smaller players in the EV industry probably a lot more, because these guys, Ford, GM, VW, even companies like Geely and BYD, they're using a lot more in the way of resources there, and they're really hurting the smaller ones. So the F-150 Lightning has been raised by about $5,000, but here's some really interesting news here. So how much does the Chevy Silverado EV really cost? This is another option that I might consider. So when I first saw the price tag on this, it was like $105,000, but there's some interesting news coming out here. So it's going to be on the Ultium platform, which we've been over this with Sandy Monroe, taking a look at the efficiencies between the Ultium platform and, of course, Tesla's battery management platform. So the Silverado EV RST, the first edition, sold out immediately and had a price tag of $105,000. I'm not paying $105,000 for a car. I don't care how much money I have. Maybe 10 years from now, if we have the same level of inflation, $105,000 would be 1 week's pay. But look, in today's market, I don't care how wealthy I was, I would never pay $105,000 for a car that I'm going to be driving every day. It's just not worth it. But this is what's going to come out later on. The Chevy Silverado EV cost, specs, and features. The EV that's not going to be that special, the high end model. It's going to be the lower end model. It's still going to have up to 10,000 max, 10,000 pounds max towing capacity. I don't need 10,000, but I at least need 5. Up to 10.2 kilowatts onboard power. You can essentially power your house all night long with all of that, all you need. And GM estimated 400 miles of range on a full charge. So if you look at the Ford Lightning, their base model, I think, has a range of about 230 miles on a full charge. So this is the GM Chevy Silverado, looks like it's going to have about 400 miles on a full charge. I would really hope that this is going to be true. So all models are going to come with a tow and haul mode, trailer hitch components, trailer brake controller. In addition, they're going to feature DC fast charging with 300 kilowatt capabilities, which could possibly add about 100 miles of range in 10 minutes. So the Chevy Silverado EV is offered exclusively in crew cab models, giving the electric truck a more aggressive look. But look, the MSRP on this is going to be $39,900. So that is the MSRP right now for the Ford F-150 Lightning. You can't find one being sold for under 51, right? So when you're looking at delivery fees and all that, that was going to be 41,595. The base model is going to have a towing capacity of 8,000 pounds, payload of 1,200. Kind of surprising the payload's that light. I'm not going to carry more than 10 sheets of plywood at a time, so I'm good. And horsepower at 510 and foot-pounds of torque of 615. So that's a solid, serviceable truck with decent range, with a 400-mile range for $41,595. That's a good deal, folks. That is a great deal. If you look at the average cost of a vehicle in the United States, that is I think it's like $49,000 at this point. So that's below the average price for a vehicle at this point. It's as fully capable as any comparable gasoline or not a diesel, but any comparable diesel truck, right? So I have MAA on my list. So let's talk about the Mid-America Apartments. Long been on my list of things that I own too. I've owned 100 shares pretty much forever when it comes to Mid-America apartment communities. So I found out that I liked the idea of owning real estate. What I didn't like was being a landlord, right? So I tend to limit the amount of actual properties that I own. And if I want to be involved in other types of real estate, I'm going to buy a real estate investment trust. And you will be surprised. If you live outside of markets like San Francisco or New York, you will probably do just as well when in terms of total return when it comes to real estate investment trust as you will buying your own property. You don't get quite the same tax benefits. And of course, you don't get the same ability to use leverage. But particularly if you are waiting to get in the real estate market and you don't have enough money for a down payment, this is a kind of a great way to save up money for a down payment. And honestly, this is one of the, when you look at the juicy yield right now of 3.26%, that's not necessarily what you'd get in rent, but then again, in distribution rather, that's not what you'd get if you rent, if you owned a property of similar value. But then again, you're managing that property. You're dealing with the headaches. If you own a multi-unit complex, you're going to be in court 2 or 3 times a year. If you have like a 20-unit complex or something like that, a distribution yield of 3.26. All you submit at the end of the year is a K1. Not terrible at all. Ignore earnings per share. It's not terribly important when it comes to a real estate investment trust because of the way the regulations work when it comes to real estate investment trust. Up to 90% of all of the income has to be distributed for tax reasons. And so when they want to raise money to go out and buy more properties, they have to do that through secondary offerings. They can't do it with retaining earnings. So, and they can't be a real estate investment trust if they don't make those distributions. So I think the market is missing something here to a great degree when it comes to, and let's look here. When you look at the max return here on Mid-America Apartments Inc. So occasionally, and this is what you do have to really look out for. One of the best real estate investment trusts that's been around is Realty Income, which trades under the symbol O. Now they are a real estate investment trust that specializes in retail properties, which retail properties you wouldn't want to touch with a 10-foot pole in a lot of cases right now, because it seems like that's going to be dead with a lot of businesses moving work to home. A lot of businesses are just moving online and virtual right now. But when you take a look at overall at real estate investment trusts, a surprising amount of them are mismanaged, right? When you take a look at things that are called Mid-America apartment communities, or it doesn't matter what it is, it may not hold a lot of apartments in it. What it may hold is mortgage paper in it. And a lot of that, and I don't know if this is the case with Mid-America Apartments at this time, but investors may be repricing or revaluing what they think Mid-America Apartment Communities is going to make, because it's possible that on their balance sheet, instead of holding actual apartments, 50% of their balance sheet could be mortgages, right? And they own tranches of mortgages right now that are paying 3.5 to 2.75% interest, which means that as interest rates rise on newer mortgages that are being issued, the mortgages that you own or their future value is actually going to drop. Okay, meaning their market value is going to drop. There's a time value of money calculation that goes in there, and there's an adjustment whenever there's an interest rate change. It's not exactly like it, but similar to bonds. You would have to reprice what that cash flow is going to be worth in the future based on current interest rates. So the current thinking, and I talked to a bunch of, so don't talk to real estate professionals about this. Never talk to real estate professionals about this. You talk to people in the fixed income industry. You don't talk to people in the mortgage industry because they don't know. You talk to people in the fixed income industry or in the industry that actually trades collateralized debt obligations. Don't talk to real estate industry people about this. Don't talk to mortgage people about this. The supposition for mortgages at this point is that mortgages are probably going to be over 5% for years and years. We're getting a normalization of borrowing on the long end, and we're looking to do that. We're looking to, or the Federal Reserve is looking to normalize things for a very long time, or normalize things for a long time. Okay. They're looking to get back to something that is somewhat normal, reduce what they have on the balance sheet, and offer themselves a little bit of flexibility for the next crisis that comes along. We can't simply beat the economy over the head with just the interest rate every time we have a crisis, and we can't simply buy government bonds on the open market whenever we need to create more liquidity. So the idea is to raise interest rates, reduce demand a little bit, reduce demand in housing, and would actually slow the rise in housing prices, which in turn would have a knock-on effect a year from now, 18 years or 18 months from now, where we would see a slow in the increase of rents. Like I have a rental property right now where I rent it out for $2,000 a month. I could easily get $3,000 a month for it now. And I just raised the rent to $2,000 a month in 2019. And then I didn't raise it during the pandemic, and I didn't raise it the year after that because she's a really good resident in the apartment, and she fixes most of my problems for me. And she could have not paid me during the pandemic. She could have just not paid me and gotten away with it. And what I realized is I'm going to return the favor by not raising rent, not realizing that rent was going to be a third higher. But I'm a man of my word. I'm going to stick to it. I'm not going to raise it till next year. But I'm not raising it to that 3,000 either. So this is an ongoing commitment to keep that housing unit affordable. But in this case, most people are not nice like me. They're going to keep raising rents. Rents are still going to go up. I think that the yields right now being generated on a lot of these apartment REITs are not fully realized. And you're actually going to see an increase in dividend and yield on apartment REITs or residential REITs going forward. And I think that the market is repricing what they're actually is mispricing rather what they're going to actually earn from rents. The problem with a lot of these REITs is, like I said, a lot of them don't hold what you think they hold. You really need to look into the prospectus of that investment. So to find out what is in there. So I'm not making a comment individually on Mid-America Apartment Communities. I'm saying this is in general. I've researched this a lot. I tend to buy the companies that have the most in the way of actual properties that they manage and the least amount of mortgage paper that they own. And I can't remember the name of it off the top of my head, but there was something like American or Armor or something like that. And a lot of folks who own that, they owned it for the juicy 11% yield in 2007, not realizing that it was all mortgage paper, not realizing that it was darn near worthless by the time 2008 rolled around. So Adam says, hey, Jason, Adam, been a long time since you commented on one of my live streams. This is Adam. This is he's our resident for the channel, resident crypto expert. I'd love to have him back on a live stream again to talk about that at some point. So Nord Stream 1 and 2 have both been sabotaged. So even if the Russia-Ukraine conflict ends, supplies can't resume. What are your short-term views on the price of oil and natural gas? So that'll probably have not much effect on the price of oil whatsoever. It's natural gas that it's going to have a price on. So I just looked at this today. The price of natural gas in the United States is up 83% compared to last year at this time. And a lot of this has to do with vastly increased demand in liquid natural gas exports. We could sell all of the liquid natural gas right now that we could export. We simply don't have the ability to export it. We don't have the ships to get it over there. And it would take a decade or more to build a pipe. I don't even know if it's technically possible to build a pipeline that far under the ocean, but there's a lot of ships that are under construction. I think at last count there were like 231 ships under liquid natural gas tankers under construction or contracted right now, which represents like a 38% increase in the fleet. But it's going to take 2 years to get those done. It's going to take 2 years for the first ones hit the water. We don't have trained crews for them. And that's one of the things, more than just the constriction of the oil and gas supply there. There's not going to be a return to willy-nilly use of Nord Stream 1. Nord Stream 2 was never opened, by the way. But there's not going to be this mass return to using Nord Stream as anything other than a stopgap measure. Europe will diversify its natural gas supplies away from Russia. If Putin pulled all of his troops out today and just said, "I'm sorry, I'm going to. This is all a mistake," and he committed ritual seppuku on in Red Square, it wouldn't matter. Europe is not going back to being dependent on Russia, and that wouldn't stop Finland and Sweden from joining NATO, and it wouldn't stop a realignment of the energy world that we're having right now. And honestly, this benefits American energy producers. It benefits, the merchant marine industry here in the United States, since we supply a lot of those officers. It benefits us in an enormous way, and it increases the amount of traffic. So, if you look at the Nord Stream 1 being sabotaged, there's not a debate here in the United States as to who did it. We all think the Russians did it. But if you're looking at Telegram or anything that's or WhatsApp groups or whatever, anything that's a little bit more internationalized, there's this huge debate. People saying, "Oh, the United States did it because they stand to benefit from it the most." So I don't think that we did it. I do think that we stand to benefit from it the most, though. I don't think that was a calculation on the part of the people who did it. I would say that it had to be either, it probably had to be Russia in this case. They don't want to be seen as willfully cutting off the supply of gas completely. They were fine with being the bad guy by cutting it back to 25 or 50%. I don't think they want to be seen as making Europeans freeze to death. And this year in the wintertime, they're going to say, "Oh, it was an act of sabotage. We have nothing to do with it. That's the reason you had a really cold winter." But in terms of, there is no medium or short-term view of the price of natural gas. That is going to continue to rise in the United States. I do think that in the interim, though, prices will probably moderate in Europe. The government is stepping in to help people afford, and many different countries, government stepping in. I think Germany announced like a $200 billion package to help with the cost of natural gas. But help is on the way in terms of supplies. What was it? Cyprus has really stepped up. Israel is making exports now. United Arab Emirates is supplying Europe at this point. The United States is supplying Europe. Morocco is supplying Europe. There's a lot more in the way of natural gas that is going to be coming the way. And it looks like Turkey is going to authorize some sort of pipeline deal. Of course, that's going to take years to produce. And I wouldn't be surprised if you see some sort of deal brokered through Kazakhstan, Turkey, Azerbaijan. That may have been part of the calculation of Azerbaijan trying to retake Nagorno-Karabakh as well. I don't know. I need to look at the geography more to really understand that. But I think you may see some sort of deal brokered between Turkey and Kazakhstan to go out and find funding to build a pipeline that would completely avoid or that would mostly avoid Russian territory, or it would at least be under the sovereignty of Kazakhstan and not Russia. Because right now they're dependent on Russia to export natural gas. They have worked out a deal with India to kind of make an end run around Russia at this point, though. So that's the other thing that has happened, is that we're seeing a sort of breakup of the economic stranglehold that Russia had on some of its satellite states. It's kind of weird when you say satellite states. Like, what would the United States' satellite states be? I know that if you are not from the United States, you'd basically say that everything in Europe is a U.S. satellite state, which I don't think that's really fair. It's not like the relationship between Uzbekistan and Russia, or Kyrgyzstan and Russia, Armenia and Russia, Kazakhstan and Russia. It's not, those relationships are not in any way relationships of equals. Many terms are simply dictated to them. I mean, if the conflict in Kazakhstan had the same, or if this conflict had the same proximity as the Ukraine conflict does with Belarus, I think that the Kazakhstani behavior would be exactly the same as Belarus. They're simply letting that stuff happen. So I would love to see Belarus, because they have natural gas as well and lots of other resources and wealth. I would love to see them drawn more into the Western economy as well, and end up being a part of the European Union at some point. Although their dictator has chosen to be more aligned monetarily with Russia, which doesn't make a ton of sense to me. They could make a lot more money being aligned with Europe. So anyway, just my opinion on this. And I said, those aren't really political opinions. That's me thinking about the long-term price of oil and gas. What's more effective right now about the long-term view on gas was the decision by OPEC Plus yesterday to decrease oil production by about 2 million barrels per day. Folks, I'm going to tell you right now, that slack is not going to be picked up by producers in the United States. That's something that journalists have been asking producers for a while, even knowing that this cutback in production was coming. Almost every CEO that was interviewed said, no, we're not going to do that. We're going to do share buybacks and raise dividends. We're going to be disciplined when it comes to our CapEx strategy. So they got burned in 2008 by investing far too heavily in new drilling and new production. And then there was this giant collapse in demand when we had a recession. So just because we came out of 2020, we had this huge explosion in demand and not enough people in production, and people, I know lots of people that work in the oil industry, especially from back in my home area. It's a boom and bust cycle. They go from making $150,000 a year working out in West Texas and driving home once a week to see their family, to working as a bartender the next year because they've been laid off, and they've got to do that for a couple of years, right? And the smart ones get used to the boom and bust cycle. Well, that's not great for CEO. This is the thing. It's not great for CEOs that get paid based on how much their company stock is worth, and that's how they get paid. So they've made efforts to smooth out the revenue stream. And part of that has to be not getting too greedy when the getting is good, and not overextending yourself. Look at all of the drillers in the Gulf Coast that were household names, that had share prices over $150 a share, that collapsed to single-digit dollar amounts after 2008 and never recovered over $30 or $40 a share. That's a lot of those. So I mean, that's a ton of oil producers out there. So if you're looking for relief in shale production being restarted here, it's not going to happen. It's not going to happen. They're going to enjoy these record gas prices. They're going to enjoy the price of oil being pushed back up. They're going to increase dividends, and they're going to institute share buybacks. That's been their plan. They announced it years ago, and they're not deviating from it because it's making them tons of money. So, yeah. Do you think that the gasoline price increase will be beneficial to EVs? Oh, it's already been beneficial to EVs. Last year, 12.5% of all vehicles sold in California were electric vehicles. It looks like something like 25% of of sales in the United States are going to be electric just by 2025. We've seen a number of different state agencies pretty much require, at least here in California and a couple of other states, require that state vehicles be electric vehicles and things like that. Some of that has to do with efficiencies. It costs you about a third less to charge an electric vehicle than it does to use gasoline to do it. So, but yeah, so Charles Bear, you make another good point here. Part shortages in the automobile industry is being resolved, but will higher prices create a problem with demand? We do run the risk of demand destruction, but it's not EVs that are causing this this parts shortage. A lot of the same electronic components that are used in internal combustion engines are also used in EVs, right? I mean, it's just because you're talking. I mean, when you're talking about different electronics that are used, they're the same. There are a few components in an electric vehicle that use that are not used in an ICE vehicle, of course. But the demand for those parts, and particularly with chips, is across the industry, not just in EVs. It's not going to be resolved until we see a reduction in demand, which we're going to see a reduction in demand when we see higher unemployment, and we are going to see higher unemployment soon. The goal of the Federal Reserve is to create unemployment at this point, right? To cool demand. That is their goal. This is not a conspiracy. This right now, this is a feature of policy, not a conspiracy. The Federal Reserve is likely not going to pivot unless we see massive strengthening of the dollar and we see yields get really, really high all on their own just because of market forces. Yields get really, really low just because of market forces. We are not going to see a pivot in the Fed like the market's kind of been betting on. I don't think that's happening at the next meeting. I think interest rates are still going up. I was betting on another 75 point basis point raise. I don't know if that's going to happen. I think it may be a little bit less, but I would bet that interest rates are still going up at the next meeting. The Fed is going to be data driven. They're not going to be driven by hysterical reaction in markets. It's going to be data driven. The data is showing right now that inflation is slowing. The data is not showing that, and we want inflation to slow at a reasonable manner, and we don't want it to slow really, really suddenly. This is an article that's out today. And this actually could be really a big concern. So inflation is going to fall just as fast as it rose. On the surface, that seems like a dumb comment, right? But it's not. If you know about the history of the other 7 or 8 inflation events since the end of World War II, the only one that didn't unwind quickly was the Great Inflation from 1973 to like 1982. All of the other inflationary periods unwound really quickly, and inflation just stopped. It didn't mean that prices went back to where they were, but inflation just stopped in its tracks. Okay, so that's not an unreasonable proposition here, like it might seem on the surface. And Michael Brush goes on to say, if you buy at the inflation peak, you do pretty darn well over the next 12 months, says investment strategist Jim Paulson. Okay. So with central banks, most notably Federal Reserve these days, move too aggressively with interest rates, things break. So, all right, the Federal Reserve often doesn't get moves on interest rates correct. They didn't raise rates soon enough in this case, or they raise rates too soon, or they raise rates too fast. They cause them, a recession, or they cause the economy to get overheated. The Fed rarely hits the mark in terms of a soft landing for the economy and a cooling of the market. Things have just gotten out of balance. Bear markets are normal. Declines are normal. Recessions are normal. Credit cycles, right? Meaning, basically, credit goes like this: you lend responsibly, and then eventually, in search of yield, when yield drops, you start lending really, really irresponsibly because you're trying to create income through volume rather than lending at higher rates. And once lending gets ridiculous and you have a lot of really poor quality loans out there, some of those are going to fail. It's going to affect your business. There's going to be layoffs. There's going to be a reduction in demand. This is what the Federal Reserve wants at this case. And this is not evil. This is not a nefarious conspiracy. This is a part of responsible monetary policy. And a lot of people would think that the monetary policy hasn't been so responsible lately. So right now, I wouldn't say that the central bank is panicking, but the markets are acting like the central bank is panicking. Their messaging has actually been remarkably clear since they dropped using the word transitory. I think probably November of last year. They dropped using the word transitory back then. Maybe it was as late as February, but they did have the additional shock of the Ukraine conflict and the effect that had on energy prices. And it's had a big effect on energy prices. And it's going to continue to have a big effect on energy prices. But I do think that inflation will stop rather quickly here. And we're looking at, yeah, so these are past events of inflation right here. And so, like recession. And if you look at the end of, this is recession shown by the gray bars and annual consumer price inflation rate. Inflation tends to fall really, really quickly. The exception is here, going from 7 with a couple interludes of 2, but not really dipping below that 9%, 10% rate until 1981, 82, after a double dip recession, really. But inflation, if you look at end of World War II, huge spike in inflation. Beginning of the Korean War, huge spike in inflation. Uh, and you have a moderate spike in inflation at the end of the Korean War. And then beginning in 1960, what we had was a sustained boom in the economy from 1960 to about 1968. The stock market stalled about 1966, right? And then in 1973, you have the Arab-Israeli conflict kicking off with the Yom Kippur War, which which caused an oil embargo for the West. And that's an interesting conflict to study. I went to a museum in Cairo years ago that was dedicated to the Egyptian victory over the Israelis in the 1973 Ramadan War, as they called it, which didn't happen. I've looked at the satellite photos. The first time I looked at the satellite photos, I didn't have my reading glasses on, and I looked like a white piece of paper that somebody had spilled a bunch of pepper over it. And then when I actually looked at it, the higher resolution with my glasses on, I realized, oh, it's all burned out tanks. This was an incredible, and basically it was one of those first conflicts that was really documented by satellite, right? And it was really, really interesting. So yeah, and if you look at the unwinding of inflation events, usually happens pretty quickly, where we go from a high of 20% just post World War II back down to negative 2% or 2% relatively quickly. We do that because of rationing at the beginning of World War II as well, and then back down because of price controls, a little bit different. And we have little less moderate ones. This is the worrying one, 1960 to about 1968 here. That's a more worrying time of inflation. That's kind of what I'm worried about. I would have worried about, say, 2009 to 2020. We didn't see that inflation. But if you look here, guys, this is the highest inflation we've had in years. It's nowhere near the highest inflation that we've had in history, not even close. And if you look, and if you look particularly, I think that anywhere between 2 and 4% is reasonable. 4% is a little bit too high, but I'll accept it. I'm going to say that we're going to not unwind in this case all that quickly. I think that that inflation will take a little bit longer to unwind than it did than the last cycle in 2008. A lot of people don't realize in 2008 we had a pretty big inflationary spike, but it only lasted a few months, and then that kind of unwound. I think we're going to have moderately higher inflation than we've had in the past couple of years, meaning we averaged 2.34 or 2.44% over the last 20 or 30 years or so. I think that's going to be closer to 3% in the next 30 years or so, mostly front loaded in this next decade. I think we're going to have inflation rates as normalized closer to 4%. I think it's going to be a little bit harder to control. So, does that mean that OIH will rip up higher than even 40%? I see here. Yeah, I don't know what the holdings are in this ETF. So remember, though, the oil market is cyclical. If we are going to go through a recession, we are going to see a reduction in demand, and you're going to see of course, a corresponding reduction in the value of holdings in here. If we don't go through a recession, and I think the chances of that are really slim, I think we go through a balance sheet reduction or balance sheet recession no matter what, meaning that we may actually see the economy grow this quarter. If it does, I still think that we're going to start to see corporate earnings be affected, largely because almost 50% of the earnings on the S&P 500 are actually earned overseas and not in the United States. And with the stronger dollar, and correspondingly weaker currencies overseas, that's actually going to affect earnings here in the United States. So you will be looking at a balance sheet recession at a minimum. I think no matter what, because of the 20% strengthening of the dollar against the euro and the pound, I think you are definitely looking at a balance sheet recession. How the market reacts to that, if the economy is actually still growing on a nominal basis, how the economy reacts to that's kind of up in the air. Like I don't know what investors are going to think about that. I don't know how it's going to be interpreted. I'm not going to misinterpret that. That is that's it's simply a currency swing that affected the income of about half of the companies on the S&P 500. I understand that. Will the wider market understand that? I don't know. Will European central banks decide to actually get looser with their monetary policy, inflation be damned, or will they increase rates? Germany will increase rates beyond a doubt. They will increase rates. How do I know this? Because they basically blame inflation for the rise of Hitler. Okay, can I say Hitler on YouTube now without getting banned? I don't know, but yeah. So with more, here's one from Charles Bear. With more macroeconomic interest rates going up, unemployment will go up, economic data will go down, small recession likely. What about the stock market? What are we looking 6 months ahead? So remember, the stock market is always a forward pricing mechanism. So the day-to-day swings are reaction to today's news, but really you're looking at what the stock market thinks the economy is going to be like 6 months from now. So I would think that the economy 6 months from now is probably going to look like it's in a mild recession. The stock market 6 months from now, I think, will likely be higher, largely because it's generally true that stock markets begin to recover long before the data actually says that the recession is over. Investors feel that we've reached a bottom, and the money will start pouring in. But here's one of the cases here. I don't think it'll be quite as extreme as it was in 2020, largely because money is not actually moving the stock or leaving the stock market. It's not moving into bonds like it was before. Cash flows, money flows look very, very different. This has been one of the, typically when the stock market goes down, you see a lot of people retreat to safety. They go into bonds. What we're seeing right now is a lot of people retreat to safety in the way of like mega cap stocks like Johnson and Johnson or Procter and Gamble or something like that. We're seeing more of that instead, and those cash flows. So yeah, I don't know how to delete comments. Okay, so chat something is advertising adult dating sites. Not interested. How do I ban you from my channel? Block user. Bang. Done. Yeah. So let me see here. I think you said the bottom is before that, but I think we're actually pretty close to the bottom right now, largely because of resignation, not because of capitulation, where everyone just says they're getting out. There's nowhere to go for investors right now. So George says, hi, I think the Fed will continue to be hawkish as long as a credit event doesn't happen or unemployment doesn't go higher. As long as a credit event doesn't happen, a credit event that's large enough to be a systematic failure, something on the level of Lehman Brothers, as long as that doesn't happen. But the Fed right now wants unemployment to go higher. They haven't said a specific number, but 3.5, 3.6% is an indication that our economy is too hot. It's way lower than historical norms. And it's creating, we have this huge problem right now where I can talk to any business owner out there and they're going to tell me people just don't want to work anymore. And I keep saying labor is a market and now you have to compete for employees. Before, just a couple of years ago, they were grateful to have a job. Today, there are more jobs than there are people who can or want to work. Number one, a lot of people have been taken out of the workforce either by COVID or by retiring early from COVID. And the generation replacing them is just smaller. And right now, there are plenty of people out there willing to work. They're just finding jobs where they pay more than what you're willing to offer, right? So the Fed wants to reduce demand, and the primary way to do that is by restricting money. And I haven't actually seen jobless claims yet. So, Vane, I haven't seen jobless claims yet, but I want to say that it's probably going to be a little bit worse than expected. Worse mean, here we go. Jobs report looms. Is it out yet? So it's due out Friday morning. So the Labor Department's due out Friday morning. So we'll see what they say on Friday morning. I know that what was I can't remember the name right now, but the company that it's a private company that does it that's really well respected. They're a payroll company. I just can't remember their name right now. AD something or other. I just can't remember the name right now. But anyway, they actually posted a surprising amount of a surprising decline in unemployment claims and an increase in new jobs. So that would actually probably cause the market to go down at this point. So and normally when you say, hey, unemployment's lower and there are more jobs available now, that would make the market want to go up. In this case, it's an indication that the Federal Reserve is probably going to be continue to be hawkish on rates. So I don't know what the target unemployment rate for the Fed is in order to reduce demand enough to get inflation back to 2%, but I'm going to bet it's 5% or over. And that would be significant, where we go from 3.6% to over 5%. And I don't even think that in terms of making this a short and sharp inflation event, that a plus 6% unemployment rate for over a year or so wouldn't be out of the question. That wouldn't be out of the question before they make that dovish pivot. So, yeah. Yes, an interesting opinion. I heard from an analyst that the market's bottom was that historically the bottom falls an increase in rates and doesn't happen during the process of historically follows an increase in rates and doesn't happen during the process of increasing rates. Okay, maybe you want to rephrase that, but that would actually be true. Like I said, the market turns around before the data is there to suggest that the recession is over, right? So, and in a lot of cases, that's true when it comes off of the bottom. Let me see here. This question, I heard opinion from the Mark's bottom. Okay, lagging. Yes, well, it's lagging. So no, that is true. Look at past events, and you can actually compare this with interest rates. I just saw a chart somewhere. I don't think I kept it up here for my screen because I thought it was too boring to talk about today. But there was a chart there that showed the recession shaded in gray, and then all of the interest rate raises and interest rate declines, and then the market. I don't remember where I saw it today, but you'll see that on there that in almost every case, anywhere from 1 to 3 or 4 quarters before the economy starts to grow, the stock market turns around. So if you're waiting to invest when the economy seems like it's at its lowest, you're too late. You probably already missed out on really significant gains. The market will turn around before everyone feels like we are, this is the darkest hour of the night. The market will turn around long before that. So, yeah. But so that unemployment report is going to be out for September. It's going to be out tomorrow. So I am looking forward to that being terrible. I want there to be more unemployment and fewer jobs available. I don't feel like that's going to happen, though. I really don't. So, yeah. So the weird thing is, Data Girl 22 is jobless 219,000 versus 119,000 estimate was 204. The weird thing is that you're looking at a difference here of 26,000 jobs over an economy of 340 million people. And the market has this extremely negative reaction to that. I don't even think that's statistically significant. Like 26,000 is not statistically significant when you look at the size of the workforce. I don't really count those moves as being positive or negative unless they're like 100,000 or more, or we see a trend right now. So I understand what you're saying. But like when you look at the scale of that, it's just not indicative to me of a data trend of any sort. And I would be happy to hear disagreement on that. But when you look at the size of our economy, like a 26,000 job difference, or 26,000 job difference doesn't make a ton of impact for me. So, man, this has been my I've had a number of questions about this today, and this has probably been my biggest disappointment for the year has been the crash in XBung. they're facing a lot of headwinds. They've got, and here's the thing: there have been lots of companies in the past that had tremendous products, great products. They were first on the market, and then they got outcompeted and they lost. I really hope that that doesn't happen to Xpeng. I really like their products. In fact, I was kind of planning next summer on going on a side trip to China, specifically to test drive a bunch of Xpeng vehicles. So I know that I'm probably going to Japan and at least a weekend in Korea. I got to see if I'm still allowed in Korea. There was an incident like 25, 30 years ago, almost 30 years ago. I may technically still be banned from Korea. One of these days, I'll talk about that on the live stream, but technically, I may still be banned. Anyhow, but I was planning to make like a little side trip as part of a longer trip just to go to China, literally to test drive as many of those electric vehicles as I possibly could. And I'm really excited about Xpeng. But let's remember, like Xpeng, Li, and Neo, we tend to think of them as the leaders of Chinese EV makers when that is not remotely true and never has been. It's really been a great story for the companies, for all of those companies. It has always been that they had about 130 different vehicle brands making EVs just a year ago. Today they've got about 300 different vehicle brands in China that are making EVs. There are many EV companies, foreign and domestic, that are producing and selling more, right? If you look at my estimate for Neo, was that they were probably never going to sell more than 1.7 million vehicles in the domestic market, period. My estimate would be the same for Xpeng, but they're going to have better margins. And that's why I like them more as an investment, because they have better control over their manufacturing process. And they're not hobbled by this partnership with a state-owned enterprise. BYD, Charles, is one of the companies that think of. Once they decided to make vehicles, or make electric vehicles, they know how to make electronic components, they know how to make batteries, and they know how to produce. They were able to do that. So we got a sort of skewed. Thank you very much for the super sticker, Vane. Thank you very much. But what I'm saying is, in terms of our information space here in America, we got a very skewed view of what the EV market looks like. And even, so I look at this website a lot, which is China Automotive News, where we talk about, look, do you know who Leap Motor is? Do you know who Series Group is? Do you know who, are you familiar with Great Wall's lineup? Of course, BOI, do you look at SAIC's motor, and SAIC has their own battery swapping thing? Are you looking at the Dongfeng Nissan partnership? We could go on. There's all kinds of brands and companies and all that you and I don't hear about in Western media. They're not covered because they don't trade here. But we're looking at registrations of newly made new NEVs or new energy vehicles from foreign brands. We're looking at those surpassing domestic brands. So the country registered 1.8 million locally made new energy vehicles in August of 26%, which are, I'm sorry, 1.8 million locally made passenger vehicles, 26.25% of which were new energy vehicles. So 26.25% of all vehicles being sold in China in August were either battery plug-in electric hybrids or they were electric vehicles. Okay. And NEVs counted for 44% of local brand overall registration. So 44% of Chinese vehicles that are sold in China are either plug-in hybrid electric vehicles or electric vehicles, right? So 405,000 registered foreign vehicle brands of the NEV share, which means that the foreign vehicles actually sold more in the way of electric vehicles and plug-in hybrids in China than Chinese companies did. This market is so much more competitive in terms of its brand saturation in the United States. Like the United States market is very hard to break into because it was dominated by the big three for 100 years. And that dominance was broken in 2008, really. I mean, it really got broken by the Japanese in the 1970s and 80s, but it really got broken in 2008 when GM and Chrysler essentially went out of business and had to be reorganized. So But in China, you've never had that big three effect where they were able to suppress innovation. We didn't really have a competitive environment until these Japanese cars. This has always been a hyper competitive market, so much so that there's some destructive competition there, and it's hard for any company to be heard over the noise. We all got convinced that Neo and Xpeng and Lee were the next best thing, only because they registered on U.S. stock markets. So, yeah, yeah. And Charles says lots of Great Wall selling in Australia. I have never seen a Great Wall vehicle in the United States, and it's a company that I don't follow simply because of that. It doesn't mean that they're not one of the most important companies in the world. Like Geely is probably one of the largest vehicle manufacturers on the planet that no one has heard of. Yeah. Oh, guys. So I forgot. I'm under a little bit of a time crunch today. I do have to get running. I wanted to thank Vane H for the $3 super sticker. It's actually the first one I've gotten in a while. I want to thank everyone for their questions today. I will be back on Tuesday and Thursday. I'm sorry, Monday and Thursday for sure next week. Because of market volatility, I think I'm going to pick up the live streams a little bit more again. And I'm going to be doing some more videos on sort of like economic policy and one again on price to earnings growth ratio. I'm still working on the script for that. But thank you very much for tuning in to today's live stream. I will see you folks next time.